Trading in today's tutorial. We will be going over the dragonfly doji candlestick. A dragonfly doji is a candlestick pattern described by the open. High and close prices equal or very close to each other, while the low of the period is significantly lower than the others. This creates a T shape that is easily identified by technical traders. This candlestick is bullish in nature, where we have an open, and sellers push the price all the way down to where we make a low. In the particular time frame, however, we do reach a level of support. We're buying momentum near the end of the time frame. Continues to push the price right up to where we close, where we opened, and this is showing a lot of bullish momentum near the close of the time frame. And we are looking for added confirmation, bullish confirmation on our next candlesticks. A dragonfly doji candlestick pattern is seen as an indecision candle. It is a momentum pause candle. The open and close are virtually equal. It looks like a capital T. It's found in areas of consolidation or areas of support. And it is a clue that buyers have taken control. On the left, we can see that we are in a little bit of a downtrend, where we have those two red bears candles, making lower lows and lower highs, where we eventually reach a level of support, where we do get some buying momentum. We can see on our next green bullish candle, we have a very nice candle form with buying momentum. On our next candle, where we get the dragonfly doji, we open right after the green candle closes, but we don't get any bullish continuation, because we do still have some selling momentum in the market from that original downtrend. As we open, selling momentum pushes the candlestick all the way back down to a level of support, where near the end of the time frame, we do get a lot of buying momentum. Buyers push the candlestick all the way back up to where we virtually open, and that's where it closes. So we close the time frame with a lot of bullish momentum near the close of the candlestick. Now we are looking for added confirmation, bullish confirmation, in order to take a buy entry and reverse the downtrend into a bullish uptrend. Here's an example of a dragonfly doji candlestick on our TradingView charts. And in this particular example, we are looking at the USD-JPY pair. And we are on the 1-minute candlestick time frames. We can see that we are in a bearish downtrend. We can see the heavy bearish candles with a lot of selling volume. And we do reach a little area of consolidation. And we do continue to the downside side where we reached B, a level of resistance. And it gets rejected there where selling pressure pushes it all the way back down to C, where we establish a new support level around 103.48 me. We can see D, we have a long lower rejection wick, which represents buyers in the market right below our support level. And E, we get a bullish close at the open. This is our dragonfly doji candlestick. And we can see where we opened, right after that bullish body on that previous candle, that we didn't get any buying momentum continue on this candlestick. However, there was still a lot of selling pressure from our original bearish downtrend, and it pushed the candlestick all the way down to DI, where we made that long lower rejection wick, but near the end of the time frame. We had a lot of buying momentum, which pushed the candlestick all the way up to where we opened. It closed virtually equal, suggesting a lot of bullish momentum near the close. This is what created our dragonfly doji. And now we are looking for bullish confirmation. And we get it on our next bullish continuation candle, which was really bullish. And it got us right back up to be our previous resistance level. And our next candlestick opened. And there was a little bit of a drawdown, but buying momentum continued, where we created higher highs and higher lows. And if we had this bullish continuation, where we reversed the downtrend to a bullish uptrend, and this was all identified by the dragonfly doji. Let's take a look at how this formed live. So here's our bearish downtrend. It is coming down, making lower lows and lower highs. Here we get an area of consolidation, little sideways trading with some bullish momentum, however. We do get rejected again right here. We have where we reach a level of resistance. And we do get additional sellers in the market, pushing the price again down further, where we need to establish a new support level. Finally, we reach a level of support, and this is our dragonfly Doji. You can see highlighted here. It starts off as bearish where we open, and we do have a lot of selling pressure. Pushing the pressure all the way down to the level of support, however. We are going to encounter a lot of buying momentum, and we will get the long lower wick where we close, right where we opens. But now you can see how our dragonfly Doji formed it. It originally opened and looked very bearish coming down. But near the end of the time frame, we had a lot of buying momentum, which pushed that. The pressure all the way back up to where we close at the open very. And we are waiting for now an additional bullish confirmation candle in order to take a buy entry and reverse this downtrend and make higher highs and higher lows. Now we get our confirmation candle, very bullish, and we continue here to make higher highs and higher lows, establishing a new uptrend and a reversal from the downtrend. A quick recap: the dragonfly Doji candlestick. It is an indecision candle. It is seen as a momentum or a pause candle. But we do need added confirmation candles in order to take trade. With this, the open and close are virtually equal. It is easily identifiable because it looks like a capital T, where we open and we close virtually the same with a long lower wick. It is found in areas of consolidation or areas of support, where we do have buying momentum. And it is a clue that buyers have taken control with additional bullish confirmation candles. We hope you enjoy this tutorial on the dragonfly bullish Doji candlestick, and in our next tutorial, we will introduce the opposite, the gravestone Doji. In today's tutorial, we will be going over and introducing the gravestone Doji candlestick. The gravestone Doji candlestick is described by the open. Low and close prices equal or very close to each other, while the high of the period is significantly higher than the former. 3. This creates the upside down to shape that is easily identified by technical traders. The gravestone Doji opens and it continues with bullish momentum where we have buying momentum, increasing the candlestick price all the way up to the high, where we reach a level of resistance where we do encounter some selling pressure, where the sellers push the price during the end of the time frame, all the way back down, where they close it virtually equal to where we opened. And this is the gravestone Doji, and it is very bearish in nature. We do need, however, additional bearish confirmation candles in order to continue the bearish trend. The gravestone Doji candlestick pattern is seen as an indecision candle. It is a momentum pause candle. The open and close are virtually equal. It looks like an upside down capital T. It is found in areas of consolidation or areas of resistance. And it is a clue that sellers have taken control. On the left, we can see that we have an area of price action, where buying momentum pushes the price up to a level of resistance, where we do encounter some selling pressure. The sellers push this candle all the way down to where virtually opened. And it is easily identifiable with the long upper wick. And it looks like an upside down capital T, where the opening price pushed it all the way up. However, near the end of the time frame, we encountered heavy selling pressure, where they pushed it all the way down to where it opens. Now we are looking for additional bearish confirmation candles to reverse the uptrend to a new downtrend. Let's take a look at an example of a gravestone doji candlestick from our TradingView charts. And in this particular example, we are looking at the USD JPY pair. And we are on the 60-minute time frame, where each individual candlestick is 60 minutes to form. We have a bearish downtrend. We can see price action making lower lows and lower highs. And we reach B, a level of consolidation where we have some sideways trading action. And C, this consolidation is happening at the area of support, where we do get some buying momentum, where buyers are pushing the price up to D, where we encounter a resistance level, where we are starting to get price action rejected by long upper wicks, where price action is consolidating in this little range from 104.44 to 104.525, and E, we get a long upper rejection wick, which represents sellers. And if we get the bearish close at the open, this is our gravestone doji candlestick that is formed, and it is giving us a clue that the uptrend may be reversing and continuing the downtrend. The gravestone doji opens and we encounter initial buying momentum, which pushes the price all the way up to where we reach a new level of resistance, where we get additional sellers pushing the price down at the E, the long upper rejection wick, where the sellers have momentum near the end of the hourly time frame, and they push the price all the way down to where it virtually opens. Now we are looking for a continuation bearish candle, which will continue to go down and make lower lows and lower highs, breaking previous support levels. And as we do this in that area of consolidation, we have sellers pushing the price down. However, there is still some buying momentum, but has not really broken that D, that previous resistance level. And in G, we finally get our bearish continuation, where the sellers do take control, and we break previous support levels, particularly C, and now have new lower lows and lower highs, where we continue our bearish momentum. And sellers are in full control, and this was all identified by the gravestone doji candlestick. Let's take a look at how this formed live. So we have a little uptrend here, and now we have encountering some selling pressure. The original trend was bearish, so this could be just a short-term pullback on the bullish side. However, we are not breaking any significant levels of resistance to continue to the further upside, and now we encounter our gravestone doji. So you can see when it opens very bullish, and continues to be bullish as we create this big bullish green candle. However, this was a 60-minute candle. So in those 60 minutes, we near the end of the time frame. Now we encounter some selling pressure as it reaches that upper level of resistance. And this is what creates the upper wick on the gravestone doji, as sellers now enter the market and start pushing all of this bullish momentum down to where this candle closes, where it virtually opens. And then we are looking for additional bearish candlesticks to make lower lows and lower highs and reverse this uptrend. Now at the end of the candlestick, you can see now that big bullish green candle now turns into a gravestone doggy, where we had all of that buying pressure push the price up. However, near the end of the time frame, we had selling pressure push it all the way down to where it opens. Now we are looking for additional bearish candlesticks, like we have here, continuing to break levels of support, making lower lows and lower highs, where we can break our previous support level right there. And now we are looking for the bearish downtrend to continue. And this was all identified by the gravestone doji. A quick recap: the gravestone doji candlestick. It is the opposite of the dragonfly bullish doji candlestick. This is seen as an indecision candlestick with added confirmation. It is a momentum pause candle. The open and close are virtually equal. The candlestick looks like an upside-down T. It's either found in areas of consolidation or areas of resistance, where we have selling pressure. And it is a clue that sellers have taken control and have reversed a bullish uptrend to a bearish downtrend. We hope you enjoyed